Financial Times. Franklin Templeton Investments. The Franklin Templeton suffered very heavy the outflow ahead of the Legg Mason deal. Investors pour money from the fund before U.S. group Landmark takeover. Franklin Templeton is on the track to end 2020 as one of the world's selling retail asset managers after investors poured money from the funds. Ahead is Landmark takeover rival Legg Mason. The U.S. group has suffered the highest year-to-date outflow any fund house globally in 2020. The bleeding net is 41.6 billion, according to data company Morningstar. The figure, which is including money market and exchanges trade funds, but exclude institutions' mandate, make January to the September this year the Franklin Templeton highest period of outflow in 4 years. It lost 36.7 billion last year and 41.3 billion in 2018. And 2017 is 27.7 billion. Okay. The flawed numbers incorporate data for both Franklin Templeton and Legg Mason following the closing of the acquisitions in July. The investor withdrawal came at the time. Upheaval for the Franklin Templeton this year, a new chief executive took the helm, and the company soon afterwards struck a $6.5 billion deal to buy the Legg Mason, taking its asset above $1 trillion. The coronavirus market shock also hit Franklin Templeton with heavy redemptions from the Indian mutual fund, forcing to liquidate 6 funds. Manager cost about $3 billion of the asset. The Franklin Templeton has not escaped its outflow. The problem is Morningstar analysis Corinne Anderson. Why outflow have plagued the company for the past 6 consecutive years, increasing the rate of the redemptions this year, underscore the challenge ahead for new chief Jennifer Johnson as she integrates Legg Mason, set the newly combined group on the path of the growth. The arbitration Rajan, chief executive of consultancy Creative Research, said, latest outflow demonstrate that investors expect tumultuous integrations process. The crunching the two businesses together will be challenges, especially since they have a very different business model, he said. The feeling that the integrations phase will be far from smooth. Investors have poured their money and hurt the performance. The experience of previous mergers, such as those Creative, Standard Life, Abundant, Janus Anderson, will be flash in investor mind, casting doubt over the value mega deal for the clients. Mr. Rajan, Franklin Templeton said, outflow were mainly linked to the weak performance certain large strategies which was not abnormal in a momentum-driving market, point positive flow to strategies including the U.S. Opportunity Technologies Innovations Fund. The company added that client reaction to the Legg Mason deal had been positive. We have not experienced overflow without the combination. Okay, but she warned the investor. Financial Times. Franklin Templeton Investments. The Franklin Templeton suffered very heavy the outflow ahead of the Legg Mason deal. Investors pour money from the fund before U.S. group Landmark takeover. Franklin Templeton is on the track to end 2020 as one of the world's selling retail asset managers after investors poured money from the funds. Ahead is Landmark takeover rival Legg Mason. The U.S. group has suffered the highest year-to-date outflow any fund house globally in 2020. The bleeding and net is 41.6